Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 14th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with my market analysis. I'm going to do the same thing for you folks out there, but I'm going to go a little bit further and talk about option strategies and trades that I'm putting on any given day based on those market assumptions or any of the information we have coming into our lives that we can create a trade around. I'm not talking about just picking option strategies out of the hat. We have specific guidelines that we follow here at Pro Trader Strategies that I've come up with over my 25 years of experience trading to streamline that process for you to find the right strategy. So when we have a market assumption, we don't just go out there on a bullish assumption and buy calls. No, we have specific guidelines that will lead you to the right option strategy that will increase your probabilities of success. All right, so without further ado, let's get on with the economic data. Today we got some economic data here in the United States that was in the form of PPI, which is Producer Price Index. Now remember, yesterday we got the CPI, so we could kind of look at it like the CPI versus the PPI, if you will. So let's look at it like yesterday we got the CPI. So the CPI is the humans, right? This is CPI, Consumer Price Index. Well, today we got the PPI, which is kind of like the, factory, if you will, where the factory is pumping out stuff on any given day basis, all right? So we've got the factories and the consumer. Now, yesterday we saw the Consumer Price Index was basically 0.2%, all right? That was in line with expectations. Now, the PPI expectations is also 0.2%, if I'm not mistaken, yes, 0.2%, all right? Well, it came out as 0.2% for the CPI yesterday. Today, PPI came in at 0.4%. So we're seeing an increase in the PPI, which is Producer Price Index. They are seeing the prices of goods, right, going into the factory are going up, all right? They are not able to offset those prices going into the consumer, all right? So that's a kind of a big deal. Why? Because we're heading into earnings season, right? So we're going to be looking at these companies and their inputs are costing them more than what they're able to recoup from the consumer, all right? So that is important because why? It makes their bottom line for the consumer, their bottom line for the corporation is going to go down, all right? So they are spending more to produce than what they were before, and they aren't able to offset those costs to the consumer. So that's pretty important to say. Like, we would be very interested in knowing that kind of information. Remember, those are both lagging indicators, but one of the things we need to keep in mind is so are earnings. And we're going into earnings, and that's going to be reflected in these earnings. So when you're out there thinking, I want to look at earnings trades, keep that in mind that you might likely see a little bit more of a lower bottom line on some of these corporations because they're not able to offset those costs to the consumer in those sales. All right, so without that, let's move on with the couple of Fed governors speaking. We had Quarles speaking a couple times and a couple other Fed governors, I can't remember exactly who, and Kaplan speaking later on this afternoon as well. All right, so let's get on with the overall markets. We've got crude oil moving a little bit higher today. We're really seeing a real mixed bag here. Crude oil is probably going to get comfortable right here at this $40 area. And we're seeing gold make a move higher after yesterday's big sell-off, and we talked about that, breaking below 1900 yesterday and settling below 1900. Today, making that move back up, even tested that 1923 area. Now, I've talked about this a lot. Keep in mind, that's the line in the sand for support and resistance. It's becoming a very major line in the sand. I believe we're going to see this market move a little bit higher, but we talked about it. Without a stimulus package like really happening, it's probably going to be a tough slog or a tough row to hoe to get back up into that level, because if there's no stimulus, that's not going to really weaken the dollar. Everybody else, a lot of other countries are still continuing to print money, and that's causing their currency to weaken, and thus, if we aren't doing the same, ours will strengthen. All right, so moving on to the bonds, up a little bit today. You know, I've talked about this. I think the value area, well, the value area is higher than here. It's closer to 178, but I think that where we should be is a little bit higher here by about 2 points in the bonds, because I don't think that the Fed is going to raise interest rates anytime soon. As a matter of fact, I think they're going to do nothing but try and suppress interest rates for the foreseeable future, which means that bonds need to move higher and get those rates a little bit lower. And then we move on to the equities. Equities are having a tough time today, as we can see here with the Dow Jones Industrial Average down. This is actually the futures. It's not the index, so it's down 166 points on the day. I like looking at the indexes because it is forward looking, okay? And as you guys know from watching many of these videos, I like to look at forward looking projections. You know, we did just go into detail on the CPI and the PPI, which are hindsight, but I think that that's important because we need to see that going forward, looking at these earnings and earnings trades that we have coming out. All right, so NASDAQ, we talked about this yesterday with the move down in NASDAQ, that it was creating a topping pattern that we typically see with the doji there today getting confirmed that the market looks like it's going to roll back over again and correct, probably down somewhere into the 1100 and 11,500 area. So we've got about another 400 points to go to see that. I don't think that that is going to necessarily be done this week, but I think that we are going to trunch down there. I mean, a 400, 300 point move in the NASDAQ doesn't seem like a big deal these days. And it seems like most of this is led because we've got the Amazon Prime thing going on. We had Apple talking yesterday about the new iPhone 12 and how 5G phone was really great. Well, a lot of people are coming out today and saying, you know, that 5G on your phone by getting the 12 is going to shut off quite a bit when it starts using too much memory, or it really sucks down the battery, so it might go into a battery saving mode rather quickly. So a lot of people are saying they're not going to go out there and buy that 12. Obviously, we are going to have to see how the sales go to see if that's really true or if it's just what we're seeing in the media right now. But at the end of the day, I don't know that it's probably the right time to go out there and buy a new phone just to get the 5G. Maybe if you live in a major metropolitan area like Chicago, New York, or something like that. I mean, even here in Phoenix, there is some 5G, but actually in Phoenix, there is some 5G. In Scottsdale, there's not so much. So California probably has lots of 5G networks. So maybe if you're in California, you're really considering that. If you're doing a lot of streaming and downloading of movies and things of that nature. But to be honest with you, I watched the football game last night on my phone in a parking lot, and it was streaming quite nicely. So a lot of times, I don't know if we necessarily need that at this point. I would wait till there's more infrastructure around this 5G before I went out and bought a phone specifically for the 5G capabilities. That's just me, though. All right, E-mini S&Ps off also as well by about 25 points on the day, quite near the low of the day. And we're going to see that overnight we saw some strength, but coming into today with the economic data that we got there with the PPI, I don't know if that's necessarily the catalyst for really causing this market to fall off, other than the fact that maybe some people are thinking what I did when we saw that PPI number is, hey, PPI, the producers, these companies are seeing higher prices and not being able to offset it with the consumer. That is going to eat into their bottom line, like I spoke about earlier there. So with that being said, we're seeing some weakness here. First green candle pretty much of the day happening right now in the E-mini S&Ps. So let's talk about EA Sports. Now, I haven't had anything with EA Sports, but I did watch this interview on CNBC earlier this morning about EA Sports. And why? Because it's kind of top of mind with me right now and has been for a while, as you guys have heard me with the streaming and the esports, things of that nature are really gaining traction. Well, this guy threw out some really good numbers that I wanted to talk about here. With that being said, EA Sports said that they were seeing record engagement. 3,600,000 people on FIFA. The new soccer release came out recently, and they saw massive engagement in and around that globally. Also, the esports sector, they saw 2 times as many people getting involved or consuming esports as we saw like 6 months ago. Also, engagement is up 20% year over year on the platform. So a lot of these things are really transitioning to the esports. I know my kids would watch probably an esports competition before they're really necessarily watching, say, a football game or a soccer game. They're watching these people do the esports rather than these mainstream sports that we are normally accustomed to. So with that being said, I didn't get into esports. What I wanted to do, or into electronic arts for the esports or the gaming aspect. I think it's probably already seen its move. He was talking ahead of their earnings, which is coming out next month. So we'll probably play that a little bit closer to that move. You can see the spike in volatility here. I think there's a lot of levers and pulleys, probably based on that interview we saw earlier today, or I saw anyway. So what I did was went into the esports entertainment group, and you get some exposure here. I think that gives you a lot more upside with very little risk to the downside. As you know, something like EA Sports, you could see a $4 move at any given time. So what I did was, this is kind of like what Jimmy Chill or Kramer on CNBC would call mad money, right? This is the money or the portion of your portfolio where you're kind of like, hey, I'm taking a flyer on this trade, and it's the money you can really afford to lose. So I did it as a very small portion of my portfolio. But I wanted to talk about this because I think that esports is going to be here for quite some time, especially if you can watch these guys do this on your mobile platform and stuff like that, which is becoming more and more readily available. So I decided to get involved in this because I don't have any exposure whatsoever to esports in my portfolio. So I wanted to get a little exposure to that. And with that being said, the penny stocks, it is mad money. It could go either way. So not a recommendation by any stretch of the imagination, but deciding that I wanted to get involved in this, and it seems like a pretty good risk reward for that type of trade. So I went out there, there's no options on this, and bought this stock for a longer term investment prowess, if you will. So with that being said, I went in there and bought the Esport Entertainment Group for $4.72, which is, as you can see, right here where we are currently trade. Actually, I bought it just slightly higher than I bought it at $4.88. Just slightly higher than where we are right now. It's at the point of control. I don't expect a massive move overnight, but I do think that we could see this market continuously clip higher. If I can double my money on it, that might be my point to get out of it. But at this point in time, I'm just going to look to hold on to this trade for the foreseeable future, at least outside of using options. As a matter of fact, I don't even know. They probably don't even have options on this. I didn't even look if they do, so I might as well, because we're talking about options, there are no options on this contract. It's below $5. They usually don't have options on this. Plus the volume on it is less than 1 million contracts. Very small company, really. All right, so without further ado, that's all I've got for you guys, other than please take a moment to go over the disclaimer that we have here that I'm going to have to pull up. So here we go. With the disclaimer, please take a moment to go over this, as we are an educational company. I'm not here to try and get you guys to limbing off the cliff with my mad money trade of the day, but just trying to get you guys informed as to how we're implementing options into our portfolio and or other trades for a longer duration portfolio. Like I said, this is the alternative asset, if you will, of my portfolio. So very high risk type of strategy. Or underlying, I should say. It is not a blue chip stock. So, it could fall on its face or it could do very well. So I'm just looking at it like the risk reward is kind of in my favor on this type of trade. Also, I did it as a very small allocation of my overall portfolio value. So take a moment to go over the disclaimer and also, give me a comment, thumbs up, what you liked about this. Oh, one other thing I wanted to talk about was the airlines. And something to note with that was airlines basically were coming out and saying that even if all of the cabin crew members worked for free on these airline flights, they still would not be profitable. All right, so leave you guys with that. If you guys have any travel and entertainment on your portfolio, that's something to keep in mind as well, to maybe start to look at covering some calls in those types of trades, lower that overall cost basis in those assets that you have in your portfolio. All right, that's all I got for you guys, other than one last thing. If you can't take that, take it easy.